Well, Canada's economy was shaken by Trump's trade war, and now with CUSMA talks looming, businesses say access to the U.S. market is getting more and more expensive. With Prime Minister Carney's ambitious budget just weeks away, a new KPMG Canada survey reveals what business leaders are expecting and what they're worried about. To break it down, we are joined by Joy Nott, partner at Trade and Customs at KPMG Canada. Joy, thanks very much for joining us.
Thanks for having me.
Okay, what's the gist of what the business people are worried about?
I think their number one concern is losing a free trade agreement with the United States, because despite all the tariffs that have been happening, the free trade agreement is actually shielding a lot of companies from tariffs right now. That being said, I think there's a realistic view by the people that we surveyed to say that the majority of them are expecting to have to pay some sort of tariff to access the U.S. market moving forward. I think everybody is getting to a point where they realize 0% access, like meaning duty-free access, is potentially going to be going away.
And so how do they want to see Ottawa deal with that? CUSMA, do they want, I mean, it's coming up for renegotiations next year. Do they want that to be a focus, and do they want to see it rebuilt or simply torn up and a new one put together?
I mean, we got resounding numbers of over 88% think that preserving CUSMA would be the number one goal, and preserving duty-free access to the U.S. market, that would be, of course, the aim. That being said, there is about 80% of them that said that they would be willing to accept a bilateral. And what that basically means is if for some reason the CUSMA needs to go away, having some sort of a deal between Canada and the United States, maybe not a three-way deal, Canada, the U.S., Mexico, having a bilateral between Canada and the United States would be acceptable. Having some sort of a deal is definitely the message that we heard loud and clear.
Wow, 80% a deal with the U.S. only. Does that tell you that Mexico is a competitor with Canada now?
I don't think so. I think that if you look at this administration and the deals that they've cut with other countries around the world, they're all bilateral deals. And I think that this U.S. administration prefers bilateral deals. So if for some reason the CUSMA needs to go away, I don't think that Mexico is seen as a competitor. Mexico plays a very important role in many Canadian companies' supply chains. And keep in mind that even if CUSMA goes away, Canada will still have a free trade agreement with Mexico through the CPTPP, the Comprehensive Trans-Pacific Partnership Agreement. It's another free trade agreement where Canada and Mexico are both signatories. So even if CUSMA goes away, we still have free trade with Mexico. And then, of course, we might have a bilateral deal with the Americans.
Okay, any surprise numbers you found in this?
Not really a surprising. No, I would say the only thing that was maybe a little bit surprising was how high the numbers were for things. For example, 85%, roughly 85% are saying that they still expect to pay tariffs to access the U.S. market. 82% think that tariffs are here to stay. So it's not surprising, but we got very clear feedback when we asked questions about what they see on the horizon. We got very clear high numbers to say that people are all sort of looking in the same direction.
And also, I think I found interesting that 82%, the $800 duty-free exemption is really hurting them. It shows you how important small businesses are, doesn't it?
Very much so. So for companies that sell direct to end consumers in the United States, that $800 de minimis exemption meant that those goods could enter the United States with no fees whatsoever, no sort of duties or taxes, no customs brokerage fees. There would be transportation fees, courier fees or whatever to get the product to the client. But other than that, there were absolutely no fees. Now, they're looking at, depending on the country of origin of what's going across, you have to look to see what the reciprocal duty rate is for that country of origin. And that's the duty rate that's charged, along with other fees, potentially, if it goes through courier systems and whatever else. So now suddenly you need to have a formal customs entry, which means you're paying a customs broker on top of the duties and taxes that you're paying. So suddenly what was a very convenient channel to sell direct to consumers in the United States just got a lot more expensive.
And with the budget coming up, what would they like to see included in that would help ease all these concerns, do you think?
There's a couple of things. I think one of the resounding things that we heard is they would like to see our tax system, a renewal to our tax system, making it more competitive to other countries around the world, cutting tax rates specifically. Also looking for broad support from the government, because a vast majority of our clients said that they were looking at exploring new markets, and exploring new markets is an expensive undertaking. So over 90% of the companies that we spoke to said that they're looking at new markets. About 50% of them have already sort of completed that review, but another 40% are planning on doing it in the next 6 months. It's an expensive undertaking, between having to potentially travel, going abroad, finding new clients, finding new suppliers, rearranging supply chains. All of that takes time and it takes money. And aside from income tax reform, which was, of course, the first thing that was on the table, they're looking for broad support to assist them to diversify their markets.
Okay. Joy, thank you very much for joining us.
Thank you for having me.
Joy Nott is a partner at Trade and Customs at KPMG Canada.